The story of hurricanes along the US East Coast is not just about the power of the storms themselves, but about the invisible forces in the atmosphere and ocean that tip the balance between quiet seasons and catastrophic years. Among these forces, the El Niño Southern Oscillation, or ENSO, stands as one of the most critical players. ENSO, which shifts between El Niño and La Niña phases, exerts a profound influence on the Atlantic hurricane season. Data from NOAA stretching back decades revealed clear statistical fingerprints of these climate patterns on storm formation, track, and intensity. For the millions of Americans living in states like Florida, the Carolinas, Louisiana, and Texas, the consequences of ENSO's mood swings are not abstract. They shape not only whether hurricanes strike their communities, but also the long-term financial health of coastal property markets and the affordability of insurance in storm-prone regions. In El Niño years, when the equatorial Pacific warms significantly, the atmospheric circulation across the globe reorganizes itself. For the Atlantic basin, this typically means stronger wind shear, the changes in wind direction and speed with altitude that tears apart nascent tropical storms before they can organize into hurricanes. NOAA's analysis shows that during moderate to strong El Niño phases, the number of major hurricanes threatening Florida and the Carolinas tends to fall sharply. Storms that do form are often weaker and shorter-lived, and many are steered away from the East Coast entirely. For residents of Miami, Jacksonville, Charleston, and Wilmington, El Niño years can feel like a reprieve. Emergency managers report fewer evacuations, fewer roofs ripped from homes, and less catastrophic flooding. Even insurers breathe a little easier during these years, as claims for hurricane-related damages often fall below long-term averages. But the pendulum swings the other way during hurricane years, when cooler waters dominate the equatorial Pacific. The atmospheric circulation shifts once again, this time reducing vertical wind shear over the Atlantic. This calmer upper atmosphere provides a nurturing cradle for tropical storms, allowing them to blossom into powerful hurricanes. The historical record is filled with devastating storms that coincided with local disasters. New Orleans, Houston, and Miami have borne the brunt of some of the most destructive landfalls during hurricanes. Hurricane Katrina in 2005 struck during one of the most intense La Niña episodes. Hurricane Harvey, which inundated Houston with record-breaking rainfall in 2017, also developed in a La Niña. Miami has seen its greatest hurricane risks amplified under unequal conditions, when storms born in the Atlantic are more likely to intensify and find steering currents that push them towards South Florida. NOAA's seasonal outlooks, which integrate ENSO data with other climate variables, have become essential for preparing East Coast communities. These forecasts help local governments pre-position resources, adjust evacuation plans, and communicate risks to the public. Yet even as the science of forecasting grows more precise, the economic and social consequences of ENSO-driven hurricane seasons are growing more severe. The US coastal property market, worth trillions of dollars, is highly sensitive to hurricane risk. In El Niño years, when risks are muted, property sales in Florida's coastal cities often spike. Buyers feel emboldened, believing the short-term risk of storm damage is low. Developers push forward with new condominium projects, luxury homes, and resort expansions, capitalizing on the perception of safety. In contrast, La Niña years often coincide with suppressed sales, price stagnation, or even sharp declines in hurricane-exposed regions, as both buyers and lenders grow cautious. The insurance industry has become one of the clearest barometers of ENSO's impact on the East Coast. Premiums for coastal homeowners are directly tied to the expected losses from hurricanes. During El Niño years, insurers often find themselves paying fewer claims, allowing them to stabilize premiums or offer more favorable terms. But when La Niña arrives, actuarial models flash red. The probability of a catastrophic loss event rises sharply, and insurers pass that risk directly to homeowners. Premiums in Florida, Louisiana, and Texas surge, sometimes doubling in a matter of years. For homeowners in Miami or New Orleans, this means paying thousands more annually just to hold on to coverage. For some, the rising costs become untenable, pushing them to sell properties or abandon coastal living altogether. The broader economy of the East Coast feels these ENSO-driven shocks as well. Banks and mortgage lenders reassess their risk exposure, particularly when forecasts call for an active La Niña hurricane season. Federal agencies like FEMA brace for higher disaster relief expenditures, straining budgets already stretched by wildfires and other climate-related emergencies. Insurance companies, some of which have already withdrawn from high-risk markets, cite La Niña forecasts as justification for limiting exposure to hurricane-prone zones. This, in turn, leaves homeowners scrambling for coverage from smaller, less stable insurers, increasing the likelihood of insolvency for a major event. The cascading effects ripple through state economies, reduced property tax revenues when values fall, increased unemployment when storm damage shutters businesses, and long recovery times when infrastructure is repeatedly battered. For cities like Miami and Charleston, the psychological rhythm of El Niño and La Niña has become ingrained in local culture. An El Niño year brings cautious optimism. Residents still prepare, but the collective anxiety is real. La Niña, on the other hand, brings a pervasive sense of dread. Supermarket shelves empty faster than the storms threaten. Plywood prices surge as homeowners board up windows, and evacuation routes cross the track. Local news stations highlight NOAA's ENSO updates, and mayors cite them in press conferences to emphasize preparedness. Yet the awareness of ENSO's role has not lessened the vulnerability of these regions. If anything, it has underscored the fragile balance between safety and catastrophe, a balance that shifts with the warming or cooling of waters thousands of miles away in the Pacific. Climate change complicates this already delicate dance. While ENSO has always influenced hurricane activity, rising global sea surface temperatures are adding fuel to the system. NOAA researchers caution that even during El Niño years, when wind shear suppresses storm formation, any hurricanes that do manage to form can rapidly intensify over unusually warm Atlantic waters. The result is that the protective shield of El Niño may be weakening. Meanwhile, La Niña years are becoming even more dangerous, as the reduced wind shear combines with hotter oceans to create an ideal incubator for megastorms. For the US East Coast, this means that ENSO remains a critical factor, but the background risk of hurricanes is climbing steadily in both phases. Insurance models, once comfortable with El Niño as a reliable risk reducer, are being recalibrated to account for this new climate reality. The stakes could not be higher for coastal property owners. In Miami-Dade County alone, the estimated value of property exposed to storm surge exceeds $300 billion. Charleston's historic district faces rising flood insurance costs that threaten to price out long-time residents. New Orleans, still scarred from Katrina, continues to wrestle with the question of how to rebuild in neighborhoods repeatedly inundated. Houston's sprawling suburbs, expanding into floodplains, face skyrocketing premiums that threaten the affordability of housing. Each of these challenges intersects with ENSO. Buyers and sellers track NOAA's seasonal forecasts, insurers hedge their bets based on Pacific sea surface temperatures, and policymakers weigh infrastructure investments against the shifting odds of catastrophe. This complex interplay between ENSO, hurricanes, property values, and insurance premiums reveals the interconnectedness of climate science and daily life. For families on the East Coast, ENSO is not an abstract oscillation in the Pacific. It is a force that dictates whether they can afford to stay in their homes, whether their communities thrive or decline, and whether their children inherit a safe or precarious future. For insurers and investors, ENSO represents a variable that can swing billions in profits or losses. For policymakers, it is a reminder that climate preparedness must look beyond local weather and account for global systems. And for scientists, ENSO is both a challenge and an opportunity, a naturally occurring pattern that, properly understood, will provide life-saving foresight. As the US East Coast braces for the next hurricane season, NOAA's ENSO updates will be watched with the intensity of stockpile reports. A declared El Niño may bring a sigh of relief from Miami to Wilmington, while a La Niña warning may trigger emergency meetings in New Orleans and Houston. Yet, the people living in these places understand that ENSO is not a destiny, it is probability. A single storm can defy the odds as seen in 1992, when Hurricane Andrew devastated South Florida during an El Niño. Conversely, some La Niña years have passed with relatively few landfalls. This uncertainty is part of what makes ENSO so challenging to communicate to the public. It sets the stage, but it does not write the script. Still, the patterns are undeniable. El Niño suppresses, La Niña unleashes. The Pacific tips the balance, and the Atlantic responds. For the US East Coast, this balance is not academic. It is the difference between a quiet season of sunlit beaches and a year when names like Katrina, Harvey, or Irma are etched into memory forever. Coastal property values rise and fall with the cycle. Insurance premiums soar or stabilize, and millions of lives are shaped by the shifting tides of a climate system that connects oceans half a world apart. The story of hurricanes on the East Coast is in many ways the story of ENSO itself, a reminder that global patterns reverberate through local lives, with consequences as vast as the oceans and as personal as a family's front door. The reality of life on the US East Coast is that everything, from property markets to emergency planning to personal psychology, is touched by the rhythms of ENSO. To understand the full scope of its impact, we need to move beyond the scientific basics and into the ways these climate cycles shape human behavior, economic decisions, and the infrastructure of resilience itself. El Niño and La Niña may originate thousands of miles away in the Pacific, but their fingerprints are visible in every insurance contract signed in Florida, every construction project approved in the Carolinas, and every long-range weather model studied in Louisiana. When we explore the intersection of climate, society, and economics, ENSO emerges not just as a meteorological event, but as a force that actively rewrites the rules of survival and prosperity along the coast. For many residents of the East Coast, the seasonal shift in risk has created what some sociologists call the hurricane psychology cycle. In El Niño years, when NOAA data indicate reduced Atlantic hurricane activity, complacency can set in. Families who might otherwise stock up on supplies, fortify their homes, or purchase flood insurance may skip those steps. Real estate developers, emboldened by the lower perceived threat, launch ambitious projects right along the waterline. Politicians facing fewer disasters may deprioritize resilience funding in favor of other pressing issues. But this lull in vigilance is a double-edged sword. When the cycle inevitably turns to La Niña, communities often find themselves underprepared for the escalation in storm intensity and frequency. Historical data bear this out. Storm-related damages often spike disproportionately over relatively quiet periods, because the build-up of vulnerability is hidden until catastrophe starts. La Niña years tell a very different story. These are the seasons that breed what NOAA describes as hyperactive hurricane environments. Reduced wind shear, coupled with hotter Atlantic waters, creates the perfect incubator for megastorms. Cities like New Orleans, Houston, and Miami know this pattern too well. The devastation of Hurricane Katrina in 2005, which submerged 80% of New Orleans, was not just a random alignment of bad luck, but part of a larger La Niña-driven climate configuration. Similarly, Hurricane Harvey in 2017, which unleashed more than 50 inches of rain on parts of Houston, occurred in a La Niña environment. Miami, which has always been perched precariously on the hurricane highway, has seen its odds of catastrophic landfall rise sharply during La Niña cycles. In these years, insurers brace for losses, emergency shelters expand capacity, and local governments issue urgent reminders about evacuation protocols. The very social fabric of coastal cities feels the weight of atmospheric shifts happening far away in the Pacific. Yet the conversation about hurricanes and ENSO is not confined to meteorology. It is also about money. Property values along the East Coast have become a direct reflection of perceived hurricane risk. During strong El Niño years, the surge in property demand can be dramatic. Buyers, feeling shielded from immediate catastrophe, bid aggressively on oceanfront homes in places like Palm Beach, Charleston, and the Outer Banks. Real estate agents advertise these periods as windows of opportunity, highlighting the lower seasonal risk. Mortgage lenders, reassured by NOAA forecasts, may offer favorable terms. But in La Niña years, the story flips. Properties that once seemed like dream homes suddenly look like financial liabilities. Appraisals are adjusted downward, sales slow, and some buyers pull out of contracts altogether. For coastal communities, this cyclical boom and bust in property markets is an inescapable feature of life in the ENSO era. The insurance industry perhaps feels the ENSO effect most acutely. Florida, already notorious for its volatile insurance market, becomes a case study in ENSO. Premiums in hurricane-prone counties can swing by thousands of dollars, depending on whether the forecast leans toward El Niño or La Niña. In fact, insurers use NOAA's ENSO updates as a core input in their actuarial models, directly tying the Pacific's temperature patterns to the financial cost of living on the Atlantic seaboard. Homeowners in Miami or Jacksonville may see double-digit premium hikes announced with the same urgency as hurricane watches. Some insurers withdraw entirely during La Niña phases, citing unacceptable exposure. Others impose strict deductibles or limit coverage for flood and wind damage. The result is that many families face stark choices: pay unsustainable premiums, downgrade their coverage, or abandon their coastal properties. The cascading economic effects of the event. Local governments lose tax revenue when property values fall, state relief funds are drained by back-to-back disasters, and federal assistance programs strain under the weight of economic. But the ENSO hurricane connection extends beyond property and insurance. It alters the very geography of the West Coast. La Niña-driven megastorms accelerate coastal erosion, swallowing beaches and undermining seaboards. In North Carolina's Outer Banks, homes that once sat comfortably inland are now teetering on the edge of the surf after years of repeated storm surge. Charleston, South Carolina, faces a rising tide of sunny day flooding that is worsened by hurricane-driven storm surges piling onto already elevated seas. Miami, perched just above sea level, watches helplessly as La Niña years bring stronger hurricanes that push water into neighborhoods not traditionally considered flood-prone. These physical changes then feed back into the economic system. Properties in eroded zones lose value, insurers withdraw coverage, and residents face the difficult decision of whether to rebuild, retreat, or risk it all again. One of the less visible but equally significant consequences of ENSO-driven hurricane cycles is the migration of people. Studies show that repeated storm impacts accelerate out-migration from the most vulnerable coastal counties. After Katrina, tens of thousands of New Orleanians never returned, reshaping the demographics of the city. Houston's expansion after Harvey slowed as flood-prone areas lost their appeal. In Florida, rising premiums during La Niña years push some middle-class families inland, where housing is cheaper and insurance more manageable. These population shifts alter political landscapes, tax bases, and labor markets. They also create ripple effects nationwide, as climate migration from hurricane zones contributes to urban growth pressures in safer inland cities. To understand the scale of these impacts, it helps to look at numbers. NOAA data reveal that the average number of major Atlantic hurricanes during El Niño years is roughly 40% lower than during neutral years, while La Niña years often see activity spike by 30 to 50%. Insurers translate these percentages into billions of dollars. A strong La Niña season can multiply insured losses several times over compared to an El Niño year. For homeowners, this is not just abstract risk, but a direct hit to their wallets. Premiums in Miami-Dade County, for example, have risen by more than 70% in some La Niña cycles. In Louisiana, where Katrina and subsequent storms devastated communities, some residents now pay more for insurance than for their mortgages. The financial strain has become a defining feature of coastal living, with ENSO cycles acting as the silent hand behind these fluctuations. Beyond economics, ENSO also shapes political debate. In El Niño years, when hurricanes are fewer, politicians often find it harder to push resilience investments through legislatures. Critics argue that scarce tax dollars should go to more immediate needs. But when La Niña years bring destruction, the political conversation flips over. Calls for infrastructure upgrades, seawalls, and climate adaptation funding dominate. Federal and state budgets swing between underinvestment and emergency spending, mirroring the ENSO cycle themselves. For mayors and governors along the East Coast, aligning policy with ENSO predictions has become a delicate balancing act. Prepare for the worst without overspending. At a deeper level, the ENSO hurricane connection forces society to confront uncomfortable questions about the future of coastal living. Is it sustainable to keep building and rebuilding in places where La Niña virtually guarantees destructive storms? Can insurance markets survive the escalating cycle of claims? Will property values eventually collapse in some areas, triggering a coastal real estate crisis? These questions, once the domain of climate scientists and economists, are now debated at kitchen tables in Miami, Charleston, and New Orleans. Families weigh whether to pass down coastal homes to their children or sell, while values remain high. Investors study ENSO patterns before committing capital to new developments. Communities fight over zoning laws, with some pushing for stricter building codes and others demanding the freedom to rebuild as they wish. The story of ENSO and hurricanes on the US East Coast is ultimately one of interconnection. The Pacific warms or cools, winds shift over the Atlantic, hurricanes form or fade, insurers adjust premiums, property values rise or fall, families decide to stay or leave. Each link in this chain is influenced by the others, creating a feedback loop that defines coastal life. NOAA's forecasts provide critical guidance, but the human response is just as important. Complacency in El Niño years can magnify the devastation of La Niña. Economic vulnerability can turn natural disasters into social crises. Policy failures can leave communities trapped in cycles of destruction and rebuilding. And the steady background drumbeat of climate change means that both phases of ENSO may become more dangerous in the decades ahead. As we move deeper into this century, the East Coast will continue to live at the mercy of ENSO. The invisible oscillations of the Pacific will keep shaping the fates of millions of Americans, deciding who pays higher insurance, who rebuilds after storms, and who walks away from coastal life altogether. For Crisis Lens, the story is not just about weather. It is about the delicate balance between global systems and local survival, a balance that tips every few years with the swing of ENSO. The deeper we examine the relationship between ENSO and hurricanes on the US East Coast, the clearer it becomes that the stakes extend far beyond annual storm counts or seasonal forecasts. What is unfolding is an evolving system where atmospheric science, urban planning, economics, and even culture collide. ENSO acts as the metronome, setting the rhythm of hurricane activity, while the United States responds in fits and starts, sometimes prepared. To understand the present and future of this dynamic, it is crucial to trace how individual cities have adapted, how markets respond under pressure, and how the very meaning of risk is being measured. Consider Florida, the state most synonymous with hurricane danger. Miami, Tampa, and Jacksonville together hold millions of residents in zones highly exposed to tropical storms. NOAA data indicate that during El Niño years, storm counts dropped significantly in the Gulf of Mexico and the Western Atlantic, giving Florida a relative edge. But history shows that even a suppressed season can be safe. Hurricane Andrew in 1992 remains the most striking example. A Category 5 storm that leveled large swaths of South Florida during an El Niño. This paradox underscores the complexity of ENSO. It shapes probabilities, not certainties. In the years since Andrew, Miami has transformed its building codes, requiring stronger roofs, impact-resistant windows, and elevated structures. Yet even these improvements cannot eliminate risk when La Niña years supercharge the Atlantic. Hurricane Irma in 2017, arriving during a La Niña phase, tested these standards brutally, leaving behind billions in damages despite enhanced preparedness. In the Carolinas, the ENSO connection plays out differently. El Niño tends to shift storm tracks away from the coast, sparing cities like Charleston and Wilmington. But La Niña draws hurricanes toward the southeast, amplifying rainfall and storm surge. The impact of Hurricane Florence in 2018 exemplified this dynamic. Formed during a La Niña pattern, Florence unleashed catastrophic flooding across North Carolina, inundating entire communities far inland. The storm demonstrated that ENSO's influence is not confined to coastal destruction, but extends hundreds of miles into the interior, disrupting agriculture, infrastructure, and livelihoods well away from the ocean. Farmers lost entire harvests, roads and bridges collapsed, and insurance payouts stretched beyond homeowners to cover vast agricultural losses. These inland consequences remind us that ENSO is not just a coastal story. It is a regional force shaping the economic geography of the entire eastern seaboard. Farther west along the Gulf Coast, New Orleans and Houston sit as case studies of La Niña's fury. Katrina and Harvey are etched into the nation's memory, not only because of their intensity, but because of how they align with broader climate signals. La Niña does more than create favorable conditions for hurricanes. It alters jet streams and moisture flows, increasing the odds of storms stalling or intensifying near land. Harvey's unprecedented rainfall over Houston was partly a product of these altered atmospheric currents. New Orleans, meanwhile, continues to carry the legacy of Katrina, with every La Niña year reigniting fears of another land-reaching catastrophe. These cities live in the shadow of ENSO, with their entire civic planning apparatus, levees, pumps, emergency shelters, shaped by the knowledge that La Niña tilts the odds toward disaster. The economic reverberations of ENSO are perhaps most visible in the insurance markets of these regions. When NOAA issues a seasonal forecast predicting La Niña, insurance companies adjust almost immediately. Reinsurance firms, those that insure the insurers, raise their rates, trickling costs down to everyday homeowners. This cascading effect has led to what experts call climate-informed market hardening. Premiums rise, coverage shrinks, and the very concept of insurability is questioned. Florida has already seen multiple insurers fall entirely, leaving homeowners scrambling for coverage from state mandated. In Louisiana, some neighborhoods hit by repeat storms are now labeled uninsurable zones. These trends mirror ENSO's cycles. When El Niño is dominant, the market breathes. When La Niña arrives, it tightens into near paralysis. Yet the economic impacts go beyond insurance. Property developers and investors use ENSO forecasts in their financial models. In Miami, a forecasted El Niño may trigger a wave of speculative buying as investors perceive a temporary dip in risk. New condominium projects rise, often on land already proven vulnerable to storm surge. Conversely, La Niña outlooks can freeze development, as lenders grow reluctant to finance projects in zones expected to face higher storm probability. This cyclical behavior creates volatility in property values. Entire neighborhoods can see property appraisals shift up or down by double-digit percentages in a few years, purely because of atmospheric signals originating in the Pacific. For middle-class homeowners, this volatility can feel like a trap. A home purchased during an El Niño boom may lose significant value when La Niña ushers in a destructive storm season. The cultural response to ENSO is equally fascinating. In coastal towns, residents talk about El Niño and La Niña as if they were old neighbors, familiar presences with distinct personalities. El Niño years, we sleep easier, a resident of Wilmington once told researchers. La Niña years, we keep the car packed. These attitudes shape behavior. In El Niño phases, families might splurge on vacations, take on home improvement projects, or spend more freely, buoyed by the perception of safety. In La Niña years, spending tightens, evacuation bags are dusted off, and conversations at local diners revolve around storm tracks and evacuation routes. ENSO becomes part of the collective psyche, influencing not only material preparations, but also the mood of entire communities. There is also a generational dimension to ENSO's influence. Younger residents, who have grown up with a steady drumbeat of extreme storms intensified by La Niña, often see coastal living differently than their parents. Surveys suggest that millennials and Gen Z homeowners in Florida and Louisiana are more likely to consider climate migration, moving inland or to less hurricane-prone regions than older generations. ENSO, in this way, has shaped demographic trends, nudging younger families toward caution and altering the population trajectory of coastal counties. As climate change amplifies the intensity of both El Niño and La Niña impacts, these generational choices may become defining factors in the long-term viability of East Coast coastal life. From a scientific perspective, ENSO is both a gift and a challenge. It provides a predictive framework that allows NOAA and other agencies to forecast hurricane seasons months in advance, giving communities critical lead time to prepare. But the variability within ENSO phases means that forecasting is never exact. El Niño reduces probabilities, but it cannot eliminate outliers like El Niño. La Niña raises probabilities, but not every season delivers a Katrina. This probabilistic nature frustrates policymakers and insurers, who must make billion-dollar decisions based on risk curves rather than certainties. The challenge, then, is translating scientific nuance into actionable plans. Too much caution can paralyze development of blatant little caution leaves communities exposed. At the heart of the ENSO hurricane narrative lies a paradox of resilience. On one hand, advances in forecasting, building codes, and emergency management have saved countless lives since the mid-20th century. On the other hand, the economic losses from hurricanes have ballooned, driven by the sheer growth of wealth and population in coastal zones. ENSO cycles magnify this paradox. El Niño offers temporary relief, but its calming effect often lulls regions into overbuilding. La Niña then strikes, delivering catastrophic losses precisely because so much more is at stake. This pattern creates what economists call the protection paradox. The safer we feel during quiet years, the more we expose ourselves to devastation when the cycle turns. Looking ahead, the interaction of ENSO with climate change raises new questions. Scientists are still debating how global warming will alter itself. Some models suggest stronger, more frequent El Niños. Others predict more intense La Niñas. What is certain is that warmer Atlantic waters give hurricanes more fuel regardless of ENSO phase. This means that the traditional safety buffer of El Niño may weaken over time, while La Niña could become even more dangerous. For the US East Coast, this translates into an uncertain future where ENSO remains a powerful influence, but the baseline level of risk continues to climb. Insurance markets may struggle to adapt, property values may face long-term erosion, and entire communities may confront the possibility of retreat from the most vulnerable areas. In the end, the story of ENSO and hurricanes on the East Coast is a story of cycles. Cycles of climate, cycles of risk, cycles of human response. The Pacific warms and cools, storms wax and wane, property markets rise and fall, and families prepare and recover. Each cycle leaves behind new scars, new lessons, and new questions about how long this dance can continue. For those living along the Atlantic, ENSO is not an academic term. It is a lived reality, a force that shapes daily choices and generational destinies. And as climate change accelerates, the dance between El Niño, La Niña, and the Atlantic hurricanes will only grow more intense, with consequences reverberating from Miami's luxury towers to the humble fishing towns of the Carolinas. Hurricanes on the US East Coast are not random acts of nature, but part of a larger story written by ENSO's shipping. El Niño suppresses, La Niña unleashes, and every cycle reshapes property values, insurance costs, and community resilience. The balance is fragile, and climate change is tilting it further toward danger. Understanding these forces is no longer optional, it is survival. Stay informed, prepare wisely, and never underestimate the Pacific's reach. For more in-depth analysis of climate, disasters, and their global consequences, subscribe now.